Hello and welcome to this session on foreign exchange markets. In this session you will learn about basics of foreign exchange, features of FX market, market participants, reasons for executing FX trades, currency acronyms and the top traded currencies and ISO codes. Let us begin. But first, let me tell you about the time when I was planning a month-long trip to the United States. This was back in 2014. I was so excited about the places that I would visit, but I was also mindful of the fact that the trip was going to be very expensive. But I had been saving up, and hey, you only live once, right? So I booked my plane tickets and I was ready to go. But there was the last thing I had to do. I had to exchange my Indian rupees and buy some US dollars. Back then in December 2014, you had to spend rupees 64 to buy $1. If I had taken my trip a decade earlier in 2004, I would have to pay just rupees 45 to buy a US dollar. Bad timing, I guess, right? If I had taken the exact same trip 10 years ago, it would have been so much cheaper since the foreign exchange rate was in my favor. But why does the value of my hard earned cash increase or decrease depending on which country I want to visit? It's pretty much the only way you want to measure the value of the currency is by comparing it to the other one. And that is how you know whether it is strong or weak. You can measure the dollar against the Indian rupee, but what if India goes into recession and the value of its currency declines? That will increase the value of dollar as measured in rupees. But if Europe doesn't have the same weakness, the dollar won't increase against the euro. Buying foreign exchange for your travels is only one application of foreign exchange market. The foreign exchange market is the largest financial market in the world, representing more than $3.98 trillion worth of transaction each day, with participants trading 24 by 7 owing to different time zones. It is also the most liquid market in the financial system. But what is foreign exchange? Foreign exchange, also known as forex or FX for short, is exchange of one currency for another at an agreed exchange rate. This can be for a variety of reasons such as tourism, commerce. Due to the fact that business is global, there is a need to transact with most other countries in their own particular currency. The strength of one currency in relation to another and the rate at which one currency is exchanged for other is set by supply and demand. For example, if there is a strong demand from Indian investors for US assets such as property or bonds or shares, the US dollar will rise in value relatively to the Indian rupee. Let us look at the features of FX market. The FX market is a global over-the-counter OTC market where the participants are interconnected through various electronic networks. There is no centralized location for trading FX. FX contracts are traded in an OTC market where the two counterparts are known. All the contracts are bilaterally agreed between the two parties given the nature of bilateral agreement. It could result in a possibility that either of the counterparties can default in their payments. The FX market is code-driven market where two prices are published. For example, an FX code of 62 by 64 will mean that the dealer is willing to buy a currency at 62, which is the bid price, and at the same time is willing to sell the currency at 64, which is the ask price. Two prices are always published. FX contracts are traded 24 by 7. They open on Sunday 5 p.m. Eastern Standard Time EST, which is 10 p.m. GMT Greenwich Mean Time, and they close on Friday 5 p.m. Eastern Standard Time, which is 10 p.m. GMT. So this is the standard timing. Moving on to more functions of the FX market. The currencies are not physically delivered amongst the participants but rather transferred from one bank to another. Since the foreign exchange market is an OTC market, the participants can trade as per their convenience using a computer. It is extremely easy to open an FX trading account and trade at any time of the day when the market is open. The primary reason for FX market having higher liquidity is because it is traded 24 by 7. This in turn means a higher amount of competition, which reduces the profit or spread that the participants can earn. Brokerage or account charges are also quite less as compared to other markets. Let us now understand the function of FX. Foreign exchange is primarily used for speculation, hedging, and arbitrage. That is for profit making. This contributes to around 95% of total volumes of FX trade. The remaining 5% is for need-based trading. These participants trade in foreign exchange market for their needs for various purposes such as foreign payments on the back of import and export transaction. So who are participants in FX trade? We have participants that need FX for need-based trading. They are the primary participants as they need foreign currency for travel, meeting, retail client requirements, and paying actual foreign currency, stabilizing the exchange rate of a currency. They include individuals, authorized dealers and money changers, and lastly, central bank authorities who monitor money supply, inflation, and interest rates. While on the speculation, hedging, and arbitrage rationale of trading, the participants take position in FX market with the view that the exchange rate will either go up or down. The participants here include investment banks, international corporations and companies, fund managers, commercial banks, asset management companies, and brokerage houses. Till now, we have learned that the foreign exchange markets are convenient to use and spread internationally. So what are the main reasons that make the foreign exchange market the largest and the most liquid financial market? There are multiple reasons for that. First, we have capital repatriation. Once the fund manager decides to exit out of a global investment, he would sell the investment in the host country and get the money paid in the investor's domestic currency. Technically speaking, it is the process of executing an FX sale trade to convert the capital proceeds to investors' home currency. Next is hedging. It is the process of undertaking one investment in order to protect other investment. Next we have is speculating. It is the process of undertaking an investment with the view of earning profit. Speculators predict the exchange rate movements in currencies and accordingly take positions in FX market which will benefit them. Continuing further with arbitraging. Arbitrage is the process of undertaking investment in two different markets to exploit the price differentials between the two markets. It is typically done between the spot market and the forward market. And finally, global investing, the process of buying foreign securities globally by a fund. A fund needs to have the foreign currency in place before paying for the foreign security purchase. In an FX trade, there are three major elements: FX buy, FX sell, and cross deals. Consider you are an Indian investor in Euro region, starting with FX buy. FX buy refers to buying of foreign currency along with selling of domestic currency. That is, you buy euros and sell Indian rupees. Whereas FX sale refers to selling of foreign currency along with buying of domestic currency, which means you sell euros and buy Indian rupees. And lastly, a cross deal refers to the buying of foreign currency along with the selling of foreign currency. This can be used if you buy US dollars and sell euros. Let us find out the most popular currencies traded globally. The US dollar and euro are the most popular ones. Others include UAE dirham, that is United Arab Emirates dirham, Australian dollars, Canadian dollars, Swiss franc, Danish krone, US dollars, euros, Hong Kong dollars, Japanese yen, Mexican pesos, Singapore dollars, and South African rand. We have already seen the popular currencies around the world. Let us now look at the percentage share of each one of them. The table shown on the screen clearly mentions the importance of United States dollars on the global FX market. Majority of trading in the world is against the USD at 87%, while the euro comes in a distant second at 33.4%. Do note that the percentage daily share here doesn't add up to 100%. This is because each FX transaction is against two sides. One is buy and one sell. The Bank for International Settlements, also called as BIS, releases figures on the composition of foreign exchange market every 3 years. The latest report for 2013 shows that the market activity has become ever more concentrated in a handful of global centers. The figures shown on the screen are the biggest 6 markets where FX contracts are traded. As you can see in the chart, the United Kingdom is the main global center for trading in FX contracts. Next, we will briefly cover the ISO 4217 codes, which provide a representation of currencies and funds for use in any application of trade, commerce, or banking. ISO stands for International Organization for Standardization. It is the largest developer of international standards. ISO publishes standards across a wide range of sectors from agriculture to technology. It publishes ISO 4217 as a standard for all global currencies. The standard for all global currencies follow the rule that the first two letters are from country's name and the third is the alphabet of its currency. Let's take an example of Japanese yen. Here, JP stands for Japan and Y represents the yen. Similarly, the Egyptian pound. EG represents Egypt and P represents the pound. The ISO 4217 codes for major currencies around the world are shown on the screen. The ISO 4217 code list is used in banking and business globally. In many countries, the ISO codes for the more common currencies are so well known publicly that exchange rates published in newspapers or posted in banks use only these to delineate the different currencies instead of translated currency name or ambiguous currency symbols. ISO 4217 codes are used on airline tickets and international train tickets to remove any ambiguity about the price. This was a brief overview of foreign exchange markets, its feature, uses, key trends and figures. We hope you found the session to be insightful. Thank you and goodbye.